Thank you so much for joining another session of the My Solo 401k Financial Daily Webinar Series. We're back for our second session of the day. We were here earlier and now we're back for round two. If you have questions or topics you wish to discuss, please chat it over so we can be sure to get to them all. I see we've got a question already. We'll turn to that question here in a moment. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor is a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So again, we're back again for our second daily solo 401k webinar of the day, our second Q&A session with My Solo 401k Financial. We're back again to help you stop overpaying taxes and start building real retirement wealth. Today's topic is how to upgrade a Vanguard Solo 401k to allow for 2025 Mega Backdoor Roth contributions. Again, this is your chance to get answers. We're going to go right to the question, so please use the chat to ask questions on today's topic or anything else. Also, please like this video, whether you're watching this on LinkedIn or YouTube or X or Instagram, as that's going to help us to get the word out to other solopreneurs. So you can help your fellow solopreneur get the word out, other advisors that might be looking to help their retirement, help their clients secure their retirement, maybe catch up on your own retirement. So that'd be super helpful. Please like this video. So first question is from Nick. Thank you for bringing the question, Nick. A solo 401k plan has its own EIN. You understand that, which is different from the adopting business EIN. That is correct. Would I need to have both EINs if I was with my solo 401k Financial? The answer is no. So we do not require, you do not need an EIN for your business to be eligible to set up a solo 401k. Consider a sole proprietor, so someone that doesn't have a formal legal entity. They don't need an EIN to operate their business. Maybe you just use their social security number. In order to be eligible to set up a solo 401k, you just need to report earned self-employment income with no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. So you don't need to have a business EIN to set up a plan with my solo 401k Financial. Contrast this with the discount brokerages that offer their vanilla plans and require you to have an EIN. Instead, the way that my solo 401k Financial has always done it, and which is the IRS expectation, is to obtain a separate EIN number for the solo 401k plan. This communicates to the IRS that this EIN number is associated with the 401k plan, which is important from a practical perspective if there's any tax reporting done with respect to the plan. Let's say in the future, you had some type of income. Let's say it's interest income for a bank account that you had opened up for your solo 401k. Well, that bank is going to report that interest income under the tax identification number that was used to establish the plan. So if the account is opened up under the EIN number of the plan, then the IRS is going to understand that that interest income is being earned inside of a 401k on a tax deferred basis, and not look for that interest income to be reported on your personal tax return or your business tax return like the IRS would if that bank account had been opened up under your social security number or your business EIN number. So in short, you don't need an EIN number to establish a solo 401k with my solo 401k Financial. Yes, we will obtain a separate EIN number later as part of the onboarding process, part of the account opening process, but we handle that as part of our service. Thank you so much for the great question, Nick. And again, if this is helping you feel more confident about your future, please like this video. It helps us to get the word out to others like yourself. So now let's go on to some of the slides that we wanted to share. So the foundation is always eligibility, right? That's what gets you in the game and be able to access some of these great features, all of these great features of the solo 401k. So what is the eligibility requirement? What's the eligibility equation? Well, there's two parts. Number one, you've got to report earned self-employment income. And there's different ways to do that. For example, if your business is taxed as a sole proprietorship, it could be an LLC taxed as a sole proprietorship. Earned self-employment income is income reported on line 31 of Schedule C. Whereas if your business is taxed as an S Corp or a C Corp, earned self-employment income is the W-2 wages that you receive from the S Corp or the C Corp. Whereas if your business is taxed as a partnership, Earned self-employment income is the income that's reported on line 14 of the K1 that you receive from the partnership. Now, the other piece of the eligibility equation is that you cannot have any non-owner, non-spouse, full-time W-2 employees. So a solo 401k is an owner-only plan. That means you could have contractors, right? Because those are not W-2 employees. You could have W-2 employees that are under 21 years of age, because they'd also have to be 21 years or older. You could have W-2 employees who are 21 years or older, as long as they're not working on a full-time basis. So full-time means that they're working 1,000 hours per year with a year of service, or 500 hours a year for 2 consecutive years. So that's what gets you in the game. That's what allows you to have a solo 401k. Now, we do have many, many customers who start out with the basic plan somewhere else, such as a basic plan at Vanguard or a basic plan at Fidelity or Schwab. So Vanguard specifically, they actually exited the solo 401k industry well over a year ago. It's probably been 2 years since they exited the solo 401k industry. What did they do? They sold all their accounts to a census. So if you go to Vanguard's website, they still will market as solo 401k, but they'll effectively just take you to a census's website. So if you've got a Vanguard solo 401k plan, you've really got an census solo 401k plan. And just like Fidelity, just like Schwab, we've got many customers that are upgrading those plans to our plan to take advantage of the service, to take advantage of the features. So for example, one of the top use cases for our solo 401k customers is the ability to make Mega Backdoor Roth contributions. And so we most certainly offer a plan that supports the Mega Backdoor Roth solo 401k contributions. As a matter of fact, we were the first solo 401k provider to offer a plan that supports the Mega Backdoor Roth solo 401k contributions. In addition, our plan allows for alternative investments. So we're talking about true alternative investments. So of course, our plan would allow for typical brokerage type investments like stocks, bonds, mutual funds. But in addition, our plan allows for real estate, crypto, private placements, private stock, etc. Another top feature is the ability to take solo 401k loans. That's where you can literally withdraw money from your 401k. It's not going to be subject to taxes or penalties. You could use it for any purpose. Could be a personal purpose, a business purpose. Again, it's not going to be subject to taxes or penalties as long as it's documented as a solo 401k loan within the solo 401k loan terms, paid back according to the required payment schedule. So number one, we prepare the loan documents as part of our service for no additional charge. Customers or their advisors just have to let us know when you're ready to take a loan, and we'll prepare those loan documents within 1 business day. Number two, the loan terms would limit that loan to no more than 50% of the balance, not to exceed $50,000. It would need to be paid back in either monthly or quarterly payments, equal payments of principal and interest. The interest is prime plus 1%, or it could be a CD rate plus 2% with those payments spread over a 5-year term. Now, let's say you have that basic Vanguard plan, really a census solo 401k plan. So the process to upgrade to our plan is referred to as a restatement. So it's not as if you're shutting down the solo 401k at Vanguard and starting up a new solo 401k plan. No, your existing plan will continue, but now it'll be governed by our plan documents. So I think it's helpful to understand that a solo 401k plan is really a legal entity. So if someone sets up a solo 401k plan at a census, you're really using a census's solo 401k plan documents, but a census is also providing the account that you have your funds in. Where we are just the plan document provider, our plan is totally portable. So customers use our plan documents to open up accounts at the bank or brokerage of choice. Now, Vanguard is not an option, right? Vanguard, as I mentioned, exited the industry. So they don't open up accounts for people that bring their own plan documents. But there's a lot of other good options based on experience and client feedback. For example, Fidelity. For example, Schwab, just to name a couple. So the process would entail updating those documents. So you can think of it as a cut and paste, cutting out your Vanguard / a census plan documents, replacing them with our solo 401k plan documents. Then new accounts would need to be established for the solo 401k, for the restated solo 401k plan, which could be, again, at the bank or brokerage of choice, like Fidelity, like Schwab. then transfer the cash and assets over. Well, really just the cash, because the census won't allow you to do an in-kind transfer, but transfer the cash over from the pre-existing a census account over to the new account or accounts that are established for the restated plan. So again, it could be at Fidelity, where the census will cut a check payable to the restated plan and then mail it to you, and then you'll take that check and you'll deposit it into the new account, for example, at Fidelity or at Schwab, wherever you choose. And we're very hands-on in helping customers open up accounts for their restated plan at the bank or brokerage of choice. So we updated these slides just to be crystal clear. Transfer cash. A census won't allow transfer in kind. Great. So for those that want to make Mega Backdoor Roth Solo 401k contributions, there's still time to make those for 2025, right? You could still upgrade your plan that you have at Vanguard or really anywhere else to our plan and make Mega Backdoor Roth contributions for 2025, because we're sitting here in January 2026, and the 2025 Mega Backdoor Roth contribution deadline is your business tax return deadline, including any timely filed extension. So how do you make a Mega Backdoor Roth contribution? Well, it's really a two-step process. You first make a voluntary after-tax contribution, because that's what allows you to take advantage of the much higher voluntary after-tax contribution limits. Those voluntary after-tax contribution limits are 100% of your self-employment compensation, dollar for dollar, up to the overall limit. For example, $70,000 for 2025, which is 10 times what somebody could contribute to a Roth IRA, and multiple times what somebody could even contribute to a Roth 401k. So you first make the voluntary after-tax contribution so you can take advantage of those higher contribution limits. Then you transfer the voluntary after-tax solo 401k funds either to a Roth solo 401k or a Roth IRA. So the foundation is that you need to have the documents that allow for both steps. And of course, my solo 401k financial has those documents. And then we have deep experience in helping customers through that mechanical process, right? Through setting up multiple accounts, one for after-tax solo 401k funds, another for Roth solo 401k funds. Now, when you make that first contribution to the after-tax account, that's not reportable on the personal or business tax return. It's not reportable on the W-2. It's optional to report that for the W-2 instructions. But what does need to be reported is that subsequent step, the transfer from the after-tax account either to the Roth solo 401k or Roth IRA. So that would need to be reported on a 1099-R. Now, it's after-tax money, so it's not taxable. It's only taxable if gains had accrued in that after-tax account. But most customers will just transfer the money shortly after the deposit, so gains don't accrue. So in that case, if no gains accrue, it wouldn't be taxable, but it's still reportable. We handle the reporting for no additional charge. Customers and their advisors just have to let us know. They submit a form on our website that they can submit 24/7 at mysolo401k.net/forms to give us the information we need to prepare the 1099-R. So let's assume that an individual is age 45, their business is taxed as an S corporation, they received $100,000 of W-2 wages from their business taxed as an S corporation for 2025. Let's assume that they already contributed $23,500 as an employee Roth contribution and did not make any other contributions to the solo 401k. Now, if they upgrade their plan to our plan in time to make that after-tax contribution by their business tax return deadline, including any timely filed extension, so March 16th in the case of an S Corp, or September 15th if they file a timely extension for their 1120S, now they'd have a plan, our plan, that allows for those voluntary after-tax contributions. And if they hadn't made any other contributions other than the $23,500 as an employee Roth, and they had $100,000 of W-2 wages, they can make an additional $46,500 voluntary after-tax contribution for 2025, and then transfer those voluntary after-tax solo 401k funds to the Roth account, so that at the end of the day, they have $70,000 of funds that have been contributed where it ultimately ended up in their Roth solo 401k for 2025, where they got the potential for tax-free growth. So additional benefits of setting up our solo 401k plan include the tax credits. So we were the first solo 401k provider to offer a plan that's makes the self-employed business eligible to claim the tax credits. Those tax credits are $500 per year for 3 consecutive years. That's going to more than cover our fees for the first 7 years, right? We charge $650 as an initial cost. That includes the $525 establishment fee plus the first $125 annual fee. Then starting 12 months later, we charge our $125 annual fee that covers the second year. So even if you added up all of our fees over the first 7 years, it wouldn't even amount to $1,500. So those are $1,500 in tax credits, not tax deductions. So that tax credits are a dollar for dollar reduction in your tax liability. So that's going to more than cover our fees for the first 7 years. Additional benefits, as we talked about, you can take a 401k loan, investment freedom, true alternative investments, like we talked about real estate, crypto, just to name a couple. We also provide the ongoing compliance support. So when you make that Mega Backdoor Roth contribution, that second step, the transfer from the after tax to the Roth, does need to be reported on a Form 1099-R. So we would prepare that 1099-R for no additional charge. You would just need to submit the form on our website, or your advisor could submit it on your behalf to give us the information we need. After you make that transfer from the after tax to the Roth, just submit it in a timely fashion and we'll prepare it for no additional charge. In addition, the Form 5500EZ, once assets exceed $250,000. So we don't have access to our customers' accounts. So customers, their advisors would just have to let us know once the value of the plan exceeds $250,000. So that includes all investments, all accounts, even the value of any defined benefit plan that might be sponsored by the self-employed business. So if the total value exceeds $250,000, there is an informational tax filing requirement that applies. The name of that informational tax filing form is Form 5500EZ. We will prepare that for no additional charge. We'll do it under the electronic filing system to make it easy for the customer, for the advisor, for all parties. Customers and their advisors just have to let us know once the value exceeds $250,000 so we can add their plan to the queue to take them through that 5500EZ filing process. So ultimately, you don't have to leave a census to unlock these advanced solo 401k features, meaning you don't have to close your solo 401k at a census. You can upgrade your plan to our plan and take advantage of these features. Now, the money will ultimately need to leave, right? Because the census won't open up plans for people that have their own plan documents. So we could say you don't need to close your Vanguard or Census solo 401k to unlock these features. You will need to move the money though, right? Because again, a census won't open up accounts, Vanguard won't open up accounts, but there's a lot of other good options. Now, there is plenty of time, as we said here in January, but it's going to make sense to sign up early just to give yourself plenty of time to update the plan documents, open up accounts, determine how much you're going to contribute, etc. Now, we do act very fast. So for example, to get started, you would go to our website, mysolo401k.net, click on open account, submit the application. It's very straightforward information like the name, the name of your business. You would choose a name for the plan. You'll see one of the questions asks if you already have an existing solo 401k. So you would say yes, solo 401k at a census. Enter the original effective date, which you can find easily by looking at the adoption agreement, or just send a secure message to a census. Once that information and payment is submitted, we will prepare the documents within the same business day to restate your plan, and then we'll guide you through the process to open up the accounts, et cetera, at the bank or brokerage of choice, transfer over the cash from a census, et cetera. All right, wonderful. Again, if this is helping you feel more confident about your future, if you are enjoying this session, please like this video, as it'll help us to get the word out to others like yourself. We also invite you to our community, mysolo401k.net/my community. We've got the largest community of solopreneurs, advisors, just interested parties around these topics. So please don't hesitate to join. It's totally free to join. All are welcome. With over 32,000 members, we have a vibrant community. There's active forums. We have a library of videos and webinars. There's a ton of ways to learn and to share the knowledge. So please don't hesitate to join. All right. Well, I don't see any more questions. That's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. Please like and subscribe so we can help build this solo 401k community if you haven't yet. We'll be back here tomorrow with more crucial content to help you secure your retirement.